Stock market traders, thank you for coming back and subscribing to my channel. Today is Thursday, January 6th, 2022. Let's look at some charts. Looking at the S&P 500 daily chart. Today was a slow day compared to yesterday's. And as mentioned in the previous video, as we expected, it found support at that 50-day moving average. It bounced off of that and is finding resistance around that 47.20 and that 20-day moving average. So for tomorrow, I expect that zone to be resistance also, and support will be the same, will be today's low and the 50-day moving average. Let's look at those zones using the hourly chart. These are the zones I'm talking about: 47.25 and 4700. So if we trade anything, we open around this area flattish. I expect that to be a heavy resistance. For support, it will be 4670 and the 50-day moving average, and even as low as 4660 will be this green box right here, the zone. And I actually got stopped out. No, I didn't got stopped out. I liquidated my position today. If you remember, I was shorting the S&P 500 via SPXU. Well, today, early in the morning, I decided to liquidate my position. Let's take a look at the 1-minute chart. And I'll tell you why. We opened lower and quickly pushed higher. The Nasdaq was even stronger than the S&P 500. So I ended up selling around this area right here. After it broke, it pushed above those moving averages. So I liquidated my position. I'll be looking for the next setup, whether long or short. Let me just go back to the daily. For tomorrow, it can be very tricky early in the morning because we have the jobs report, so we can open way higher or way lower. I mean, very unlikely that we can open in inside this zone right here. Otherwise, I would have considered buying today and trade versus that low, today's low, and that 50-day moving average because of tomorrow's jobs numbers. I do not want to have a tight stop and open lower and end up taking a bigger loss than I anticipated. But I will be watching those zones very closely tomorrow. I'll take a look at the Nasdaq 100. Today was a bullish day based on the fact that it dipped below the 100-day moving average and quickly pushed above it. So it now held that level for the second time in the last, say, 2-3 weeks. But it's still, the chart looks terrible at this point. I mean, I think that was the last line. This is the last line of defense right here. This support. If we break below that, I think this uptrend might change, or at least become a lot more choppy. I mean, we've been in this range for weeks. I mean, couple of months, and look how choppy this thing has been. Look at that. Once we break above this range, expect momentum to pick up even more, either to the upside or to the downside. Levels I'll be watching tomorrow, looking at the hourly chart, will be today's high around 15,900. Pushes above that, the next big strong resistance might be 16,000. For support, it will be this zone right here between 15,700 and 15,500. So this zone should act as heavy support. That level, this here, has been acting as support the previous weeks twice. So I expect a lot of bulls to show up if we end up getting down to that zone. If it decides to push higher, it will be a very choppy ride. I think the path of least resistance at this point is lower. I'm talking about here versus, say, here. So anything in between, I'm not interested in buying. But if we end up spending another day or two around this area and then push higher, that'll be a nice bounce. And I will be looking to go long. For now, I'll just watch. Let's now take a look at the Dow Jones. Still in a very strong uptrend, but I think today the short-term trend has changed from negative to positive. It's now below the previous high since yesterday. Now it's below these moving averages. It still looks bullish, but it looks like it's losing momentum. If it goes up, I expect that to act as very strong resistance around 36,600. For support, 36,200. That should act as heavy support, which is today's low. And then also the 20-day moving average, 36,000. And then the 50-day moving average around 35,800. So tomorrow, I'm sure it's going to be a very volatile day due to the jobs report. So expect anything, a volatile day. For the semiconductor index, it opened kind of flattish, dipped, and then reversed higher. Now is between all these moving averages, so expect a lot of resistance up here around this zone right here where that red box is. For support, it will be the 50-day moving average and around 3,800. Anything in between will be very choppy. So for the next couple of trading sessions, we'll see which way it wants to exit, the upper range or the lower range. I'll take a look at small caps, Russell 2000 IWM. Still looks like an ugly chart. Same as the other indices. Try to push lower, reversed, and it closed off the lows of the day. But then this one here is below all these moving averages, so expect a lot of very heavy, strong resistance on the way up. If it decides to go up, I think the path of least resistance is lower from here. But if I'm wrong, like I said, it will be a very choppy trade. Expect lots of resistance around this area where all these moving averages converge, where that red box is. The way down, like I said, I don't really see much support until you get down to this zone, which has been the low for the last few months. Anything in between here, I think is going to be very, very choppy. Either the bull ride or the bear ride. I'm not interested. Let's take a look at the pattern. The head and shoulders, inverse head and shoulder patterns that we've been watching for the last couple of weeks. We kind of see where it's going now. Maybe it was not really a cup and handle. Maybe it's going to be like a real inverse head and shoulders, but we'll see. Maybe this is a low and then it's going to push higher. But we'll see. For now, I think, like I said, there's nothing to do. Very heavy resistance up above. So we'll play a session by session. Anyways, has been my analysis for today, Thursday, January 6th, 2022. Good luck trading tomorrow. And again, thank you for watching.